Support and resistance are really like the fundamentals of technical analysis. What we're going to do in this video is we're going to kind of break down support and resistance to help you understand in a very basic way how to look at a chart and how to find your support and your resistance levels. Now, in this particular video, what we're going to talk about is resistance, then we're going to talk about support maybe later on. And I'm going to use the example of ULTA. So the ticker is going to be ULTA. We're looking at a 5-year chart. And when we're looking at resistance, what we're looking for is where do we see people start to reject that current price? And some people want to see the line touch X amount of times at a certain level. That could be important, that cannot be important. What we're looking for is where do we see price rejecting over a certain time frame. The time frame can be a year, it can be 5 years, it could be a week, it could be a day, it could be 20 minutes, 15 minutes, it could be 11 seconds, it could be 500 seconds, it doesn't matter. The time frame is not important. What's important is what we're looking for. And we're going to kind of use price to tell the story. So this can be done with actual numbers, or it can be done with a visual, what we're calling a chart. But it's the same information, just displayed differently. We're looking at ULTA on a 5-year view, and we're looking at weekly candles. And what we're seeing with ULTA is when it got around this 555, let's say 560 level, it started to reject. So what I'm going to do is I'm going to put a horizontal line there. So this is going to be my resistance point for ULTA. Now I know on a 5-year, on the weekly candle, which is mean the price over the course of the week, I've seen ULTA reject that price twice. And it was a very, very severe and strong rejection. Now, as a person aware, if I just want to go on technical analysis and don't want to do any fundamentals, don't want to care about the macro, don't want to care about the operations of the company, what I would say to myself is, what is the probability that it rejects again around that same level? We do have this candle going well above that level. So let's say 555 to maybe let's say 565 will be the range that we're looking at. Do we believe that ULTA will reject in that range? Then if we do, we can look to short it. We can look to buy puts on it. It doesn't matter, because what we believe is that it's going to go back and retest those lows underneath this particular price, because we've seen it do that multiple times over a 3 to 4 year period. Now, what you can do now, you know where these are at. That's going to be one of our key levels on a larger time frame. Now, what you can do is you can now say, let me go to a yearly, let me go to a 6 month, let me go to a monthly, and try to find other levels. But what do we know? Our overall top key level that we're looking for rejection at is going to be that let's say 555 to 575. If you don't understand this piece, the problem is that everything else you're going to build after this is going to be probably incorrect. What I would encourage you to do is get the major fundamental piece. What is going to be our top line of view? So what's going to be our 30,000 foot view? And what is it showing us? What it's showing us is what we just talked about, where the rejection point is at. Therefore, what you can do is you can look to short it in that range and just wait and see what happens. Because if it rejects at this level, what we're going to be looking for is to continue to reject all the way down. So this doesn't demand that you look at it every day. It demands that you set a short, you set a stop on your short to where if it goes over a certain level, you close out the short. And you walk away and you let the OCO order or you let the conditional order do its thing. Or you buy puts and you look at it and you maybe can set a stop for your put to where if it goes over a certain price point, it'll X's out the put. But there's no reason to look at this every day. You may lose some money doing that. True. Now, here's what you can do. You can set a price alert and say once it gets under a certain price, once it gets under, let's say maybe 550, you get an alert and then you put on your short or then you put on your puts. And you just wait for it. Even if it continues to go up, let's say it goes up to 580, I would still look for it to reject. Now, why would I look for it to reject? This is where the fundamental comes in at. Because who's going to buy a makeup company at $600? It's a belief that we're going into a weaker consumer market, especially with like discretionary items. We need to believe that people are going to continue to buy this stock because revenues are going to support this stock at higher and higher levels, where they'll look to buy this at $580, $590, $600 a share. But over the last 5 years, they didn't want anything to do with that price. We can look at during the pandemic where the market was flush with money and it still stopped out at the same level. So here's the pandemic, here's the move up. Everybody had money during this time. It just kept moving up, but it did start to reject. So that's what I want you to understand. When we're looking at resistance level, we're going to go top line first. And we're going to look at top line. And then we're going to take it from there. Here's going to be the takeaway, and here's going to be, I would say, what you would want to work on your own. Go to any kind of charting software you have. It doesn't matter which one you use. They all do the same thing. They just show you a chart. Pull up Ulta. Go to the 5-year view and find this resistance level. And then continue just to look at this particular chart and understand from a, let's say, 30,000 foot view or a top line view, I can go to this particular ticker that I've just been shown, and I can find the top line resistance level on this particular ticker. Hope you got some value from it. Talk to you later.